Hi, everyone. I'm Shannon Austin, and welcome to the $1 Trillion Opportunity Podcast. In today's digitized world, is embedded finance a FinTech niche, or is it simply how business gets done? Now, that's one of the questions we'll explore in this week's bonus episode. I'm sitting down with Linda Yu. She recently joined Quona Capital as a partner leading our growth strategy. Linda has worked with Bank of America, Merrill Lynch, Warburg Pincus, and was also at SoftBank, where she helped deploy over $4 billion in investments. If you're a founder or working for a regional startup, you won't want to miss this one. She has some great advice on how to make a standout pitch deck and how to grab the attention of a global investor like herself. Here's my conversation with Linda Yu.
Hi, I'm Linda Yu. I'm a partner at Quona Capital, leading our growth strategy.
Linda, tell me a little bit about where you grew up.
I was born and raised in Beijing in China, and I grew up in a family of academics. So my father was an electrical engineering professor, my mother in computer science, and my grandfather was a mechanical engineering professor. It was really an environment that taught me to ask why about everything I encountered, not just how things worked technically, but why people and systems behaved the way they did.
Was engineering something that you were tempted to go into?
Actually, when I was young, I did think about being a scientist. That's what I wanted to be when growing up. But I was curious about the world beyond a lab or working on a computer. By my teens, I started reading a lot of books on Warren Buffett and realized that investing and finance was just another kind of problem solving. Instead of being in a lab, we were problem solving with people, capital flows, and incentives instead of formulas and equations.
That Warren Buffett biography, it really got around. I know so many people that read it as a teenager, as a college student, and were really, really moved by that. So you went from sort of being the child of academics and the granddaughter of engineers to going into venture capital. Tell me a little bit about what that looked like from college to grad school in terms of how your point of view about the field evolved and changed during those years.
I attended undergrad at UC Berkeley. I then went into investment banking after my undergrad years. I did that for a couple years before starting my investing journey with Warburg Pincus. They sent me to get my MBA at Stanford and had a return offer to come back with a more global mandate working in our Asia office. I think that was my aha moment about really taking my career to an international level. I realized that finance could be a force for impact because when we were looking at investing in Asia, we were very financially oriented and profit driven, but at the same time, my investments made an impact to the people and the world they lived in. It reminded me of actually my parents when they were professors. They mentored a number of students studying under them from developing countries. Reminded me of how access to education and resources really changed their lives and industries back home. So I wanted to pay forward and do the same with my investing career.
When you were in that work in China, were there any businesses that you invested in that you thought, gosh, if we could just work with them on their impact? Because I think a lot of people think that capital is going to be the be all end all, right?
Yeah, I actually saw this both with my experience at Warburg Pincus as well as SoftBank. So my personal favorite two thematic sectors to spend time and pouring money into were one, real estate, and two, edtech, for distinct reasons. Like philosophically, those were just big multi-$100 billion markets in a country like China with 1.5 billion people. And secondarily, I really did see this gap in access to both education and housing.
Right. Depending
on which tier of social class you were in. And so one company I ended up investing in while at SoftBank actually serves affordable housing for blue-collar migrant workers. And out of 1.5 billion people in China, about 300 million of them, the size comparable to the whole population in the United States, were migrant workers. One of the technology-enabled apartment operator called Z-Room, we ended up putting a lot of money behind. They would take these apartments and divide them up into multiple units. The way that when I first started my career in New York, I rented this one bedroom with another roommate and we divided that up into a 2-bedroom. So this company in China was systematically going about doing that for about 1 million apartments at the time. Now it's multi-millions, and converting them to like 2 to 3 rentable units to these migrant workers, making affordable housing just so much more accessible to the working class. That's one example.
Was one of the challenges that basically if you've got workers who are sort of following the harvest season in different parts of the country where they are they also people who need shorter term leases or things that kind of meet them with the circumstances they have? Is it sort of an effort to both right size it, but also make the payments work or make the lease term work?
Exactly, Shannon. So the whole thesis was providing housing, but actually there were embedded finance, meaning they could get a loan to pay. They could remain in the same ecosystem of housing and, rent in 3 months in Beijing, rent another 3 months in Shanghai without actually having to go through different brokers. So it was a one-stop shop for anybody who was working outside of their hometown, just showing up to one city and being able to access the room digitally almost right away.
This kind of solution for embedded finance that basically enables a consumer to sort of be loyal to a company that can facilitate their living or their housing situation in lots of different places kind of really lights you up. Did you know that you were venturing into embedded finance when you were working with that company, or have you just kind of realized that in hindsight too?
Honestly, I think the word embedded finance became a term over the past few years. But if you think about everything that got venture capital interest or got growth equity interest over the past multiple decades, everything is embedded finance because people need to pay for services, right? People rarely paid for services in the digitized world today by using cash. So every app, every digital interaction, every service you buy, every service encounter you come across on a digital app or on a internet enabled software is embedded finance. Now that I'm at Quona, I tend to believe that the world we serve is no longer a fintech niche, but it is globalizing into a financially connected world where everything we do, even outside of fintech, are embedded finance driven.
Well, so then the Quona opportunity came around. Tell me a little bit about what you're excited about with Quona now and moving into the future.
I think I really resonated with Quona's thesis, which is backing fintech and tech-enabled solutions in regional and global markets. It resonated with me because these are the markets where access to digitization and financial tools can really change lives. The multiplier effect we're talking about here is really extraordinary. When someone who has never had a bank account in their life gets access to credit or digital payments, it can really spark entrepreneurship and create jobs and elevate communities, as we've seen with a lot of the impact scores we received on our portfolio companies.
And I think too, like when you hear some of the founders, such as Stefan Muller from Klar, talk about their customer level stories, there are a number of customers who will say, I mean, just like having a debit card for the first time is a game changer in how I carried myself and how I felt walking into a bank. Or, you don't think about it when you have access to it.
Possibly like 5 to 10 years ago, when I made my backpacking trip to Southeast Asia, Myanmar specifically, I visited this rural community where mobile payments, like Alipay at the time, I was purchasing this jewelry piece from a small shop owner. She told me that her business doubled within the last 3 months, not because she had more customers or foot traffic, but just because digital payments allowed her to close shop and take the bus into town back home to deposit go back home rather than taking the bus into town to deposit the cash. It was like this vivid memory and this reminder of how technology changed her life. And it was the first time that I saw that in rural Vietnam, like this type of impact could really have on people who are living in these tier 3 cities.
Exactly. I think we forget from little things, big things grow. And when you think about how significant it can be, something just like changing the direction of the bus that you're on because you've already got the payments electronically or whatever, that can be a game changer as well. And I know in your previous roles, and of course in this one, you will be seeing a lot of founder pitches. And, it's easy to recognize a really bad pitch, but what sets apart a good pitch from a great pitch in your perspective? What do you think founders really need to know before they walk in the room and break out their investor deck?
The biggest founders tend to have one common trait, and is that they have the ability to keep their heads above the cloud while at the same time keeping their feet on the ground. And what I mean by that is a lot of times you'll see founders come in and do a pitch and It's very big picture, and you start questioning how they're going to execute that. On the other end of the spectrum, you may see a pitch that's so granular in execution strategy that you're wondering, like, is he losing the big picture? And so I tend to see really successful pitches to be striking a pretty good balance between those two spectrums I described. And that is to say that they have audacious goals. They know where they want to be 5 to 10 years from now. But at the same time, on a daily basis, it is a grind, right? It is an execution grind, and it is making sure that your unit economics are sound. You have path to profitability. You have satisfied customer with high NPS and high retention. I like to see a entrepreneur open with a big grand vision, but really distilling that down to, no more than 5 levers from a measurable KPI perspective that he wants to achieve in the next 100 days, next 1 year, next 5 years.
It makes so much sense. What do you think that outside potential limited partners need to understand about emerging markets and impact? What do you wish they knew?
Yeah, I think there's this outdated risk perception about regional markets, or emerging market as you call it. If you visited Brazil 10 years ago versus when you go there today, it's a completely different feel and feels like a different world today. Same thing with Cape Town in Africa. So I think that risk perception is often very outdated for people who haven't visited those geographies recently. And I think many regional fintechs today are operating with technology, governance, compliance standards equal to, or if not exceeding, developed markets. And that market size is often underestimated. People tend to think the unbanked, quote, quote, used to be a niche market, but it is actually the mass market in these developing economies, and they're the majority in many of these economies.
Exactly. Yeah. Thank you so much for making time to chat. I really appreciate it.
Thank you, Shannon.
That was Linda Yu, growth partner at Quona. And that's it for this bonus episode of the $1 Trillion Opportunity. Thanks so much for being with us, Linda. You can follow the $1 Trillion Opportunity on Apple Podcasts, Spotify, iHeartRadio, or wherever you listen to podcasts. The $1 Trillion Opportunity is produced by Quona and Pod People. Our producers are Danielle Roth and Hannah Pedersen. Carter Wogan and David DeLuca edit the show. Thanks, guys. Special thanks to Rachel King, my hero, and Amy Machado. Stay tuned for more.